Stocks pause after a break of 13 days of gains, with advances and declines almost balancing each other in anticipation of fresh cues. Capital goods and consumer durables are the big gainers, even as energy and financials drag in trade.
Bajaj Housing Finance fixes an offer price range of 66 to 70 per share for its IPO set to open on September 9. This pegs the market valuation of the business near 58,000 crores.
Vedanta announces its third interim dividend for FY25 of 25 rupees per share, amounting to around 7,800 crore rupees, of which the promoter entity will get 4,400 crores. The hefty payout will help the parent, Vedanta Resources, pay its debt.
The Cabinet Committee on Security clears a 26,000 crore Aero Engines order for HAL, while Keynes Technology gets the Union Cabinet's nod to set up a chip unit at Sanand with an outlay of 3,300 crores. Well, hello and welcome to Halftime Report. You're watching CNBC-TV18 this afternoon. I'm Ekta Batra and with me is Nigel D'Souza. Well, it's turning out to be a day where we are just about seeing some amount of consolidation, as you can see on the frontline indices. We have the mid-caps which are outperforming, but stock-specific action continues. So we do have cues, which are coming in terms of specific stocks. The overall texture of the market is probably because the US markets were closed overnight, so there's not too much action which is coming in from there. But nonetheless, in terms of stocks which probably are seeing a lot of volume and price action today, and they should come up for you, it's been an excellent listing for Premier Energies. That stock should come up for you. I think one of the best listings that we've seen in a really long time, up around 90-odd%. Mazagon Dock Shipyard seeing very good volume traction today. Geo Financial Services as well as Zomato, all of these stocks buzzing in terms of volumes and turnover in today's trading session. Overall, lively in terms of stocks, but the frontline indices quiet.
Well, that's right. It's more stock-specific day today. And contrary to what we have seen the last few days, when the large caps have been doing well and the mid caps have been underperforming, today it's been a bit of a switch where you have the mid cap index that's trading in the green, while the large cap stocks are struggling a little bit. Let's welcome our first management on the show, though. Imami, that's a stock in focus. Remember, the stock is up close to around 80% in this calendar year itself. Imami, well, they recently acquired the remaining 49.6% stake in Helios Life Cycle, which is known as for its premium men's grooming brand, The Man Company. Do note, Imami already held close to around 50% stake in Helios. To discuss this and more, we have Mr. Bansali, the CEO of Finance, Strategy and Business Development and CFO, who joins us on the show. Hi, Mr. Bansali. Good day and thanks a lot for taking our call. Well, give us some details with regard to this. You already had more than a little over 50% stake in the company, and you've gone and bought the remaining 49.6% stake in Helios. Could you tell us at what valuation has this deal been done?
So we are, has already been announced as well. So it is at agreed to acquire the balance shares at 177 crore odd.
177 crores. Got it. For the first quarter, we have numbers of the Man Company and Briller, which grew by close to around 23%. Could you tell us for TMC, what was the growth?
So the growth with that is also aggressive, and both TMC and Briller both are growing aggressively. And as you might have witnessed, last year also we have crossed around 180 crore kind of a turnover, and we are a bit positive on the Man Company.
Okay. All right. So 180 crores is what you did in FY24 for both these two entities?
No, just the Man Company.
Okay. Just the Man Company. Got it. And currently, I understand that TMC and Briller, both of them put it together, they constitute close to 7 to 8% of the total revenues. Where do you see this number headed?
No, it would be around the Man Company is at around, since we are at 3,600 crore on an overall on an last year FY24, and would be around 5%.
Yeah, but okay, so 5% is only TMC, while Briller would be the remaining 2-3%, right?
Around yeah, maybe 1%, 1 to 2%.
Got it. Okay. So TMC from 180 crores Where do you see this number going? You must be having a vision that you've gone ahead and bought the remaining 50%. So where do you see this revenue number scaling to as a percentage of the mix, what it could get to? And EBITDA positive is what it is, but when do you see the margin, say, move to mid-single digits or double digits?
So we are very optimistic. The opportunity is huge for the male grooming and particularly male grooming in the premium and niche segment. And we are at very appropriately positioned. So we expect a kind of to reach around 500 crore over a period of 3 to 4 years. And expect this to carry it from there also. We are very bullish on the opportunity.
This is only TMC, right? 500 crores?
I am talking only the man company.
Okay, you're only talking about the man company, but this grooming segment, this male grooming segment, sir, how much is it growing at in terms of a pace?
So it is, as a category, is growing in double digit. And
So
and we are, as I said, that we are appropriately placed and we want to beat the category growth.
Okay, so tell us, what is the category growth and what do you want to grow at?
So it's very, as I said, no, over it. So what I would narrated is a directional growth of over 3 years. So it could be somewhat here or there, but over 3 to 4 years to grow aggressively to reach kind of a 500 crore kind of a target.
What is the cash on books now for you all post this acquisition that you all made, or your complete buyout of Helios?
So currently we are in the cash of around 500-600 crore kind of, and this would be a payment of less than 200 crore, and that also over a period of 1 year.
Okay, and this is going to be funded via your internal accruals?
Yes, yes.
Okay, and what is your acquisition strategy going forward now in this category as well as other categories?
So we are always, we will continue to remain on the lookout for strategic investments and also full-fledged acquisitions, kind of the way we did for Cash King or Dermicool kind of acquisitions, or Prim 21 for that matter. And we recently, in last 4 or 5 years, we invested in many opportunities. The first one was the Man Company, then Brillare, then in a pet care company, then in a juice company, and also nutrition-based company. So these are all strategic investments which will nurture and grow. We will grow along with them, and over a period, if the things go well, we may acquire, and as for the comfort of each other, ours and that of the promoters, we may acquire them over a period of time once the business comes to a size.
Okay. So now, Mr. Bhansali, since we've spoken about this acquisition extensively, since we have you with us, just wanted to touch upon the whole situation with Bangladesh. We do understand that you get around maybe 5 to 6% of your revenue contribution from there. And correct me if I'm wrong, but what is the situation right now? Has there been a formidable impact in terms of sales from that particular region for you all?
So while there had been some impact in 1 month or 1.5 months, in fact, there had been the disturbances from the last year itself when the elections were declared and all, the last quarter of the last fiscal. But despite that, we had grown, and our business, there was some disruption in July and August. But now the things have resumed. Now we already have a manufacturing plant over there as well, and that has also resumed the operations, and the marketing activities and the distribution is also happening. But I believe that the stability will resume once the new government takes up the charge, and there would be something on an economy level. So stability is what is expected, but otherwise our market share and the distribution, the products, everything is intact, and we are all full of growth going on from here.
And you get 5% of your revenues from Bangladesh?
Very difficult to say, very precise. How much was it? Maybe around 4-5%.
4-5%. Got it. Before we let you go, I just want to clear the air with this male grooming segment. What is the total size? I think you were saying that you're going to go to around 500 crores in the next 3 years. But as of now, how big is the market? What is your market share, and where would you like your market share to go to?
So you may not get kind of a male grooming per se. So within this, there are so many categories. So if you look at
At the segments where you are present, Mr. Bansali, where you are present, if you could tell us.
So we are present in many categories. So male grooming is an overarching category, and within this, then there are hair care, skin care, beard oils, from beard to all this. So all this taken together is huge market, right? And so it is only a segmentation which has been done just to suit the pricing, price positioning kind of a thing. Otherwise, it's a huge market. Look at the established players also. So the idea is not to only to take off from the existing startups, but also to take market shares and to grow the market shares, to grow the business from the established and the young generation, established markets and the young generations as well.
Okay, just before we let you go, Mr. Bansali, just wanted an overall picture in terms of what we can expect in Q2. Are you going to see any kind of impact in terms of your P&L because of the Bangladesh situation in your Q2 numbers, say in terms of revenue or EBITDA? And secondly, would you be holding on to your entire FY25 guidance of around 5 to 6% volume growth with a 1.1 to 2% price increase and 26 to 27% margins? So Q2 as well as FY25.
Yeah. So while there are all these things are there in the public domain, but just again to reiterate, we do not expect a substantial impact on our results because of the Bangladesh. And because the international market, while the challenges are there across markets, but we are taming them, and we are hopeful of coming out with appropriate growth in the international business overall as well. And we continue to have our guidance of what you said would be a volume-led growth of 5-6% overall.
Pleasure talking to you,
and
Mr.
the
Bansali.
EBITDA margins are also good.
26, 27%.
I hope I have replied to all your questions then.
Absolutely. 26, 27%, right, is the margin.
So it is hovering around that. And see, the idea is we do not bind ourselves by the numbers. In fact, if you feel that there is an opportunity, you tab it. We do not have any binding like this. Right? So we are very flexible. You want to tap the opportunity, and if we feel that there is no opportunity, then there is no point spending. Then conserve and get the profit. So, but the objective is to have a profitable growth.
All right. The objective is to have a profitable growth. Thanks, Mr. Bansali, for taking the time out and speaking to us and giving us all of that perspective. And not to mention, they're sticking with 5 to 6% volume growth. Don't expect any kind of impact in Q2 on account of the Bangladesh situation. And the male grooming segment, Nigel, I think you'd be better placed to talk on that.
Up and kicking. I mean, wow. Big opportunity there.
Huge opportunity.
Huge opportunity. I mean, they did 180 crores last year, and they're talking about doing 500 crores in 3 years. You know, so you're talking about the revenue going up by close to around 3x. So.
We have one candidate sitting right here.
Yeah, I mean, absolutely. But that's about that. And I think as, Mr. Bansali was speaking to us as well, and he detailed the outlook from here on, I think the stock as well has moved to the high point of the day. Keep in mind that Imami was actually an underperforming till a few months ago. And in the last few months, it's been the biggest outperforming FMCG stock currently at the high point of the day as we speak. Well, we'll slip in a short break. On the other side, we'll focus more on markets. And on HAL, that's another stock that's buzzing in trade. Stay with us. Welcome back. Well, keep an eye out on PNB Housing Finance. The stock has seen a big recovery from the low point of the day. We had the management earlier today, and they sounded quite optimistic about growth, about the asset quality, and the way they are changing their mix, their loan mix as of now. So pull up an intraday chart. The stock has moved to the high point of the day. Tata Chemicals is another one that's moved up. I think soda ash prices as well have seen an up move from June onwards. So that's a stock that's done quite well in the last few minutes in particular. Keep an eye out on that one. Well, let's focus on another stock that's moving around. HAL, it's higher in trade after the cabinet approved the procurement of 240 engines for the Air Force. Brokerage firm Antique, well, they are positive on the stock. Upasana joins us to break that detail down for us. Upasana?
Thanks so so much for that. HAL remains in focus as Cabinet Committee on Security has approved procurement of 240 aero engines from HAL. This contract is valued over 26,000 crores and deliveries will commence 1 year from now and is expected to be completed over next 8 years. On back of this development, Antique has given a buy rating on the stock with a target price of 6,145 per share. It says that this order will further bolster company's already strong order backlog of 94,000 crores as of FY24 to 1.2 lakh crores. It says although the near-term financials may seem a bit volatile for the company, as company has been facing challenges to execute large Tejas Mk1A orders, but despite of all this, it believes that the stock is attractively valued with a multi-year double-digit earnings growth potential. At the current juncture, the stock looks attractively valued with robust return profile of 20% plus is what the brokerage has highlighted. So all in all, a positive note coming in from Antique on back of this development, and HAL continues to remain in focus.
Okay, all right, Upasana, thanks very much for that. Well, we'll take a short break, but Jay Thakkar will join in next to discuss technical. Stay tuned.
Welcome back. Well, from the broader markets as well, a few stocks are buzzing around. SmartLink has suddenly moved to the high point of the day. Only 2 lakh shares traded on the NSE, but that one suddenly has spiked up, so keep an eye out on that one. Brigade has moved into the green, so that's building onto the gains as well. So keep an eye out on a couple of these stocks. Well, Jay Thakkar as well joins in. Hi, Jay. Good afternoon and good to see you win. What's the call on the index first? You know, there have been calls for some cooling off, but this market is moving one way. That's northward. At around this 25,300 mark, what's the trade?
Hi, very good afternoon to you, Nigel. Well, Nigel, see, overall, we have seen a very good move coming recently on the index, wherein we have seen Nifty bouncing back and we have seen the gains of positions, at least for this weekly expiry, I would say in the range of 25,300 to 25,400. But on the flip side, I would say that 25,000 is an immediate support as well, and I don't see a correction below 25,000. So there can be some consolidation, and we can see 1% or 1.5% correction from here on, not more than that. And once that is done, I think that index would again rally towards 25,500 plus levels. Major reason for that, which I see, is that the Nifty Financial, which was an underperformer so far, I mean, this month, if you see the kind of move which we have seen coming back into Nifty Financial Services, I mean, it has clearly provided a breakout, and we have seen majority of the stocks performing quite well there. And the broader markets are already in an uptrend, as you said rightly, that they are already in an uptrend and they're in the northward journey. So that continues. I don't see a major hurdle as of now. It's just that some consolidation, and that would be a buying opportunity.
Okay, all right. And what about specific stocks?
Sure. So, Ekta, as far as stock-specific ideas are concerned, I have 2 buy recommendations. One is on Ultratech Cement. It's trading around the levels of 11,400, 425 right now. So one can buy at the current price. The stop loss can be placed at 11,250, and the target would be of 12,000 going forward. So it's a good risk reward if you see. It's almost 1:2 plus risk reward. We have seen a good consolidation or correction happening in Ultratech Cement. Now, prior to that, there was a good long side cycle, and it has got a minor hurdle at 11,500, wherein we have seen good OI on the call side. Once those levels are taken off, I mean, there is no major hurdle until 12,000. So Ultratech Cement is the first buy recommendation. And second is on IDFC First Bank. Technically, it has formed a nice inverse head and shoulders pattern. The momentum is bullish. We have seen some short covering happening now here. And on the upside, I believe that from the current levels of 75, is likely to head towards the levels of 80 in the short term. So that would be my target. One can buy this with a stop loss of 73.
Okay. All right. Well, we're going to leave it on that note, Jay. Thanks very much for joining in and talking to us and giving us those technical calls. We take a short break, but up next we have with us Sunil Thakur, who's a partner at Quadria Capital, to discuss trends in the pharmaceutical and healthcare space from a private equity standpoint. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, it's turning out to be a session which is quite quiet for the frontline indices, but the mid-caps are outperforming. But let's get talking about one particular segment, that is private equity interest within the entire pharmaceutical and healthcare space. We have Quadria Capital, which is a healthcare-focused private equity firm managing assets worth around $3.5 billion. The firm has made investments in the public listed space in Indian companies such as Akim's Drugs and Pharmaceuticals and Concord Biotech as well. Quadria has partially exited Akim's during its IPO in August 2024 and fully exited its investment in Concord Biotech through the company's IPO in August of 2023. To talk more about their themes and the approach towards Indian healthcare, we have with us Sunil Thakur, who is a partner at Quadria Capital. Joining in, Sunil, hi, welcome to the show. Well, let's start by talking about your two listed investments that you had. You had Concord at one point in time. But give us a sense in terms of the kind of returns that you made for both Akim's as well as Concord Biotech.
Thank you, Ekta, and good afternoon to you and your colleagues. Thank you for having me on this show. As you rightly mentioned, we took two of our pharma companies to the public market in the last 1 year, and they have been pretty successful. For us as a fund, they've delivered over 3x returns, and it mainly comes because of the thesis that we used while investing in both the companies. So Concord, if I talk about, which we took public about a year back, exactly about a year back, is a company that's in the specialty pharma space. It's a global leader in immunosuppressant space. That company has a solid global leadership in that particular therapy area and has done pretty well since the listing. It's doubled since the time we took it to the public. Similarly, when you talk about Akim's, that clearly underlines the thesis, which is backed by the huge global and local pharma demand, especially the local pharma demand. Akim's manufactures about 10% of what is consumed in the country, and that thesis has been well taken up by the public market and has seen a stupendous success after listing. The stock has gone up by about 35-40%. And again, we delivered over 3x on our investment. And these are two trends that we would want to back going forward with any pharma investments that we make in the future.
So what specifically is the trend? A strong market share in whatever the company does?
So very specific things, I would say. One is on the specialty side, which is, manufacturing pharma products that are complex to manufacture and grabbing a large market share using a technology that's differentiated and creating a lot of barriers. So Concord, if you talk about, it's a fermentation technology that is being used to manufacture complex transplant medicines. If you talk about Akim's, that delivers a thesis which is built on scale of, having over 16 plus plants in India and having a market share that constitutes about 30% of the overall contract manufacturing share in the country. And every 10th product, pharma product that you consume in India comes from Akim's. So on one hand, Concord signifies specialty. On the other hand, Akim's signifies scale, volume, generic products for a market that needs huge consumption of pharmaceutical products.
Okay. Well, that point is taken. You do have this put option in Akim's. Can you just explain to us what it is and if it's exercised?
So there is no put option. It's just a term that most private equity funds use when they make investments in private companies. But now that Akim's is listed, there is no such option or there is no such special rights that we as a fund have.
Okay, so no special rights in Akim's. You have I think around 4 to 4.5% pending stake in the company. What is the timeline of an exit?
We like the story, and that's the reason why we retained our 1/3 of our holding in the company, and we believe in the long-term growth of the company. So we won't be selling in the near future. We still have about a runway of about 6 years in the fund for us to before we liquidate the fund. So we would be holding in for some time. In any case, as we speak, we are in a lock-in period.
Yes. Okay, so you'll be holding on at least your stake even post the holding period. At least your visibility should be around 6 years. That's what you indicated?
That's for the fund life. There are no specific comments with respect to ACOMs, but as I said, we believe in the long-term story of ACOMs, and we would want to see that we do justice to our holding in that company.
Okay, so as of now, you're at least staying on. Can you give us a sense in terms of what you're looking at when it comes to the services segment? Because there's a lot of interest which is coming into, hospitals when it comes to private equity, as well as the medical technology or medical devices segment.
Absolutely. See, the sector itself requires an investment of up to around $250 billion over the course of next few years. So there are many segments within healthcare delivery that we like. But if I have to be specific about some of them, we like single specialties quite a bit. And we've been very successful over the course of last 10, 12 years in delivering good returns when we invest in single specialty. Further, what we like is we like the entire diagnostic space. The per capita consumption of diagnostic in a country like India has to go. And it's a decadal growth story. We like regional hospital plays, not so much pan-India, but regional hospital plays, which plays on brand, which plays on the entire local ecosystem and create a solid hub and spoke model. So these are the few segments within healthcare delivery services that we like.
So you like single specialty segments and you like diagnostics, which is a multi-decadal growth story according to you. But growth has pretty much, slowed down a little bit in the diagnostic space. How do you pick and choose within the diagnostic space in terms of private equity investments, considering that there are a couple which are already trading at extremely high valuations and maybe the others won't be able to make that much of a mark when it comes to market share?
Well, there are many white spaces in the diagnostic area. So while we have few listed companies and they may set a trend line of the overall growth, but if you look at the mid-market players, if you look at players who are playing a regional story, if you look at players who are playing the specialty diagnostic play, you will have enough and more opportunities. And we believe that there are quite a number of companies that can tick off that checklist of being a specialist, being a regional player, and having strong moat and value proposition that will be attractive to any private equity investors like us.
Can you tell us what your strategy would be in Strand Life Sciences? How much do you hold in that particular firm? It's a specialty diagnostic company. What is the plan? Is it eventually going to come to the market?
Ekta, we sold our stake to Reliance few years back.
Okay.
So while it shows as one of our portfolio companies, but and a company that we take pride in, because again it played the specialty diagnostic area, we sold our stake to Reliance about 2 years back.
Okay. All right, Sunil, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Sunil Thakur, partner at Quadria Capital, talking about their investments within the entire Indian healthcare space. Well, we'll take a short break. We'll get you more on the markets, and Lata will decode why the chief economic advisor has questioned RBI's inflation targeting framework. Stay tuned.
Economic advisor has questioned RBI's inflation targeting framework, says that interest rates can't control food prices, calls for a critical review of the framework. Lata joins us to explain why this call can be crucial to the RBI's monetary policy. Lata, please explain this to us.
The chief economic advisor's article in the Mint newspaper, it's an opinion column, can perhaps shake the foundations of monetary policy making. We don't know whether this is the first call to a debate or is it already a fight? We don't know how it will evolve, but you can't ignore it's an extremely important column coming from an extremely important person, chief economic advisor, on a very important issue on how monetary policy is made. Remember, the monetary policy targeting framework went into existence in 2016 after an Urjit Patel committee recommended it. 2016 October was when it was put into motion. Now, what is the economic advisor saying in this article? He says the economic survey had a box item saying that should we include food while setting an inflation target because food cannot be controlled by interest rates. He says, I'm disappointed that most people did not take this question seriously and said that RBI's inflation targeting is a settled issue. He says it is not settled. It is open for debate, like everything in science and social science is open for debate. And he gives several arguments why the idea of RBI controlling inflation through interest rates and how it sets the target needs to be questioned. First, he says the RBI cannot control food prices. I mean, food, suddenly potatoes or wheat or rice becomes expensive because a harvest has failed. How can you correct that with interest rates? So supply side issues cannot be corrected. Short-term rates anyway cannot control this. He also actually points out that it will be unfair to give the Reserve Bank the responsibility of controlling food prices when they don't have the means. He's not even saying it as against RBI. He says it is in their favor not to set it as a target which you can't give them a KRA which they cannot deliver. And then he goes on to say that whenever food prices have been controlled, you need government intervention. You know, they release stocks from the FCIs or the stocks they hold, or they release onion stocks. So government intervention is needed. And here comes the most crucial thing he says. If government intervention is needed to control prices, should not the government be party to the decision-making on interest rates? This is, something which at least startled a lot of people whom I spoke with. Are they saying that government representative is needed in the MPC? What does this sentence actually mean? Then he goes on to say the Reserve Bank in various ways has argued that food prices, even if you allow it to, if we don't control it with higher interest rates, then they will pour into non-food prices, into other things. He says that's not true at the moment. Food inflation is high for the past 5-6 months, but core inflation has gone to 3%. So it's not often proven by facts. He also says globally in many countries like Japan and the US, for long decades you didn't have inflation, although interest rates went to 0 and minus also. In spite of it, you couldn't create inflation. So even the converse didn't work, and ultimately only when both the fiscal deficit and monetary policy was loose was inflation created. He proposes that India's actually inflation performance was very good up until the 2000s. It became, high in the years from 2009 to 2013. We had double-digit inflation for 4 years in a row because both monetary and fiscal policy were loose. Before that, we had something called a multiple indicator approach, where we looked at many things before setting the interest rate policy. He says that it is important to go back to that, to consider going back to that phase as well. Now, we don't know exactly how the Reserve Bank will react. The Reserve Bank already reacted to that economic survey piece because in the minutes of the monetary policy meeting, the governor does say at one point that food inflation, we need to control food inflation because it can lead to higher inflationary expectations of households. So in a way, he answered it, and he also said there will be spillover to non-food items. So clearly, the Reserve Bank is opposed to the point of view, but we will have to see whether this is the start of a long fight. Important to note that the monetary policy framework anyway comes up for review every 5 years, and that 5th year is 2025 March.
Okay, all right, Lata. Thanks very much for that. We take a short break. On the other side, Manisha Gupta will be joining in. She has with her Surendra Mehta, who's the secretary at the India Bullion and Jewelers Association. Stay tuned.
Welcome back. You're watching a halftime report. Joining us now on the show is Mr. Surendra Mehta from IBJA. Mr. Mehta, hi, thank you so much for joining us. Well, there's a lot to talk about when it comes to gold and silver. But first things first, and we do understand that there are concerns when it comes to imported silver to the tune of 5.7 tons. It has been 40 days. It hasn't been cleared via IRBX. What really seems to be the concern? How are you approaching authorities?
See, this silver which is being brought through the IIBX, which is an exchange platform, the quantity is about 5.7 tons. And this has been purchased by our members who are bullion dealers, who are the qualified, authorized jewelers who can purchase through the IIBX platform, and this silver has been purchased under the UAE SEPA agreement through this exchange platform. And this has been purchased pre-budget, and very surprising, it has been more than 40 days, 42 days. The silver consignment are not cleared by the custom authorities from the gift city, and we don't know what is the reason. And this is the Indian has already imported about 2,000 tons of silver in last 1 year, which is about 14,500 crore. I do not understand why this 5.7 tons of silver is not cleared since last 45 days.
So, Mr. Mehta, I'm assuming there has been a conversation, one, with the exchange, two, with the customs department as well. So why is this particular tranche, only this particular tranche not getting cleared?
See, I don't know, but let me be very blunt with you. There is no accountability and responsibility either of the IIBX. They are not prepared to take any responsibility for the same. There is no accountability, responsibility of the gift city. There is no accountability, responsibility of the International Financial Service Center Authority. We have written several letters to the Department of Commerce, to the Finance Ministry, and to almost all the agency, IFSCA, Gift City, IIBX, but nobody seems to be clear as to why the custom authorities are not clear this consignment. It is almost like I purchased some script from the NSC, and the script does not get credited to my Demat account for 45 days without any reason being given to me. See, eventually this silver is purchased from the qualified supplier appointed and authorized by IIBX. The buyer has no connection, buyer even doesn't know who's the seller, and still the system is not clearing. So what is the use of purchasing something from the exchange platform? And we must understand that Gift City is the dream project of Prime Minister of this country. And if this is the fate that for 45 days custom will not clear the consignment, why should our members encourage the purchasing from the exchange platform? Then we would rather take all this from the banks only, which is already existing.
So, Mr. Mehta, you're saying that this is the only tranche that is getting stuck. Otherwise, silver in the country is coming via various other avenues.
See, that is not the point. The point here is why it has been stuck. Why the custom authorities are not clear this consignment? And you must also understand one thing, that this silver consignment, the consignment was imported when the duty on UAE SEPA silver was 8%. Now the duty post budget is changed to 6%. Our members have already paid the entire money of 5.7 tons. They have paid 8% duty also, and still the custom is withholding those goods. Is the custom really authorized to do this? I don't think custom can, after the duty is paid, duty is taken, they can withhold the silver like this for 45 days without giving any reason. And there is no accountability. Nobody is prepared to take any responsibility. There is no letter written by anybody to our members as to why this consignment has been held.
All right, clearly a concern, and I do hope that there is a solution soon on to this. And as you said, this is done on a higher, customs duty as well. As of now, it is at 6%, but 8% was paid under SEPA when the silver was imported. Mr. Mehta, since we have you with us, what is also your sense on the prices right now? Because near term does seem like there is some pressure. The dollar index is at a 2-week highs. There is U.S. non-farm payroll data on Friday. The U.S. Fed meeting in mid-September, almost a given that you will see 25 basis points of a cut, if not more. How are you looking at the prices going forward now, especially for silver?
See, as far as the market is concerned, the market has always been looking at two major aspects. One was the war situation and another is Fed meeting. Now the war situation is not escalating, and the next Fed meeting for the interest rate cut is on 18th of September. So I think till that time the market is going to be little bearish, and there will not be any major movement in the gold prices in the international market, and naturally this will have an effect on Indian market also, except that our rupee is getting slightly weaker. So overall, I see that we may see in the next 15 days gold in the international market going down up to $2,435 or so. And on the higher side, the resistance can be at the most $2,535 or $40.
All right. Thank you so much, Mr. Mehta, for joining us. Well, of course, there is a concern and we hope that gets sorted soon. While there is some correction that you can anticipate going forward in case of gold and silver prices. So sell if you are a trader, buy if you are an investor is the kind of call coming in for that one. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.